Hey guys, welcome to the third episode of the Mic'd Up with Mike podcast. I have a very special guest today, Monica. She's one of our near and dear friends and lenders, and she can go ahead and introduce herself, and we're going to get going.
Well, first of all, thank you for having me, Mike. And my name is Monica Boggs. I'm with Frontier Loan Group, and I've been in the business well over a decade. I love working with home buyers and investors, and I'm honored to be here today to chat all of the above.
Right on.
Yeah.
So I think it's interesting that I tend to start gravitating and working with people I either get referred or known, and my wife Jessica has known Monica, and their sisters were friends. So it's just great to work with people you really know. So why don't you give us a little background of how you know Jessica and her sister, and and then how it's important to kind of work with people you know and understand.
Absolutely. So what do they say? 6 degrees of separation is truly like the case in this particular situation. So ironically, Jessica's older sister, Andrea, and I went to high school together. So we were in the same grade. So we high school friends. And then later down the road, I have a son in high school, and he's talking about his good friend Mackenzie, who is coming over to the house and hanging out, and they're good friends. And I later learn that Jessica and Mackenzie are sisters.
Yes.
So it's pretty interesting that I went to high school with one of Jessica's sisters, and then my son went to high school with one of Jessica's sisters. And then my son went off to college and lived with Mackenzie's boyfriend, Tyler, actually.
Oh, I didn't even know it was that, it went that deep.
Yeah, I lived with Tyler his sophomore year. They had an apartment together. They were roommates at the University of Oregon. So it's pretty intertwined. And I think that when it comes to business and knowing people from your past, knowing where you come from, and just like our backgrounds and work ethics, it helps just aligning with one another, because you know who we are.
Yeah, 100%.
And small world.
Yep. And as I've been building out my business, I've been looking with people to kind of partner with and add on to the team, including social media, mortgages, title. Yes. So, rounding out that team has been one of the most important things I've done for my business, to make sure that I could take it to the next level with confidence, and make sure that when I'm referring or we're doing business, that everything's going to click immediately. So that's been the case, and I've just been so happy to, add you on the team, and that we were able to
be part of it.
Work together and, do a bunch of real estate business.
I agree. It's definitely an honor, and to see the way your business is growing and all the different projects that you're immersing yourself in. It's really fun, because seeing and learning from someone who was pretty green just, maybe 5 years ago to this business, and seeing that it's possible is so enlightening, because as I mentioned to you before, I get phone calls all the time from people who want to become investors.
Yeah.
And I'm low-level scale investor, but when I can say that I know someone and I have access to somebody who would be a good mentor or knows the ropes and can give you the ABCs and the ins and outs, it's really nice to have you to reference.
Right on. I appreciate that so much.
Yeah, absolutely.
So, first of all, let's talk about how you got started in mortgage lending, and give us your start and what your business does now.
Wonderful. So it is a family business that was started in 2003. At the time, I wasn't ready to fully come on board. I had young kids who I was putting through private school, and didn't want to enjoy the ups and downs of our industry quite yet.
Yeah.
And so I watched my family get into this business and really help change the lives of people. And from 2003 to about 2000 till today. But what I ended up doing was I ended up getting my real estate license.
Okay.
I got my license because I thought I can do a little side hustle and sell on the side and compensate for what was to come with college bills and such. And I got my broker license, and I started my first transaction. I was thrilled. I was like, this is great. I didn't know the art of a transaction and what makes a transaction solid. And I learned very quickly, and that's when I pivoted my career instantly. And what I learned was that if your lending wasn't strong and you didn't have like a proper lender, the whole deal could fall apart.
100%.
And what I also learned is that lender controls whether or not I eat as an agent. Yes. And that's not going to pay college bills. That's not going to handle things. So I thought, I want to be on that side. And ding, 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 I have a master's degree in finance. I'm going to go ahead and try to leverage this. And I want to be the mastermind behind the deal. And I want to make agents happy and people happy. And I want to make sure if I can control it, deals don't fall apart on my watch.
100%.
Yeah,
and
so
I can tell you from experience when I'm listing homes and an agent comes with an offer in the email and they copy their lender and the lender gets right back to me or calls me right away and says, hey, we can really push the time frames.
Yes.
And they're just like so on top of it. I get super, super comfortable about accepting that offer. And it's one of my, it's my biggest thing. Every time a lender has contacted me or been very on top of it right when the offer is submitted, it's always been a successful transaction. I know they're on top. So one of the most important things when I'm receiving offers is making sure that lender is on their A game, or I kind of have to think twice and really call and examine that transaction.
100%. I know that it's a best practice that we've put into place in my company because, first of all, I think the agent has a huge task with just getting the deal accepted.
Yes.
And they have to craft an aggressive offer and an offer that makes sense and an offer that's going to get it accepted by both the seller and the agent. My job is to sell them on paper to the agent and the seller
100%.
with all their finances and let them know, like, just because we're going this route doesn't mean that they're not capable of going another route and they have this financial strength. So one of our best practices, to your point, is to call the moment an offer is submitted. I'm CC'd on all offers, and I actually call, and I think it's great. And agents do appreciate it.
No, 100%.
Really
I know. I talk from experience. Like it's one of the top things on my list when looking at offers. So appreciate that you do that, and then appreciate when all the other agents and lenders out there are really on top of their game. It makes the transaction so much easier.
Note that, everyone.
Yeah, exactly. Let's talk about basically affordability. I know right now interest rates are really, really high.
But are they?
yeah, exactly. But are they? Yeah, I love obviously your opinion on that and where things are going. But talk about the start of a transaction. What do things people need to know to prepare? What type of documents do they need? What should they be doing months ahead before they start looking for a property to move into that they probably don't know? Because I get when I work with buyers, I generally get the sense that they don't have any lending connection. Sure. And so they haven't been told, hey, you need this, this, and this, and you need this, a month, 2 months, 3 months before you're actually starting to look at homes. And, their timelines get really scrunched because they haven't been prepared. So why don't you talk about the beginning of a transaction with someone that's looking to get qualified?
Yes, absolutely. And I find that with first-time buyers, they typically don't know the process. Yep. And then if you haven't bought a home in 10 years, the process may have changed. Right. So it's like, what is the process? Well, if you're buying with a co-buyer, you need to know where your credit stands. You need to know who's the strength. And unfortunately, who's the weaker link of the two, because that's going to impact the loan, the interest rate, and where you stand. So just knowing where the finances are, you'd be shocked how many times I've run credit for a couple and I had to reveal things that they didn't know about each other. And that caused a little bit of tension in the room because knowing where your partner stands really makes a difference.
Right.
Now, I'm not saying on your first date you need to ask someone's credit score and such, but you do need to know what's going on, right? You do need to know what's going on. But no surprises. So knowing where credit stands, knowing that you've filed and have all of the taxes documented and filed properly. I recently did an intake for somebody who hasn't filed taxes in 5 years. Get out of here with that. Like, get out of here with that. Like, when are they going to arrest you when you finally do? I don't know. That scared me.
You're going to jail, sir.
Right. You won't be going to your new home. Right. Yeah. Your new home is a penitentiary.
That's so funny.
So
that's good.
So your taxes, of course, knowing where you're financially, where you stand, and just making sure that your overall debt is under control or you have a plan for it. And if you don't, align yourself with a lender that can create a plan. I think that people are afraid to talk with lenders and go through the process because they're afraid of learning that you can get pre-approved and create a roadmap in advance.
Yeah. What is the, I hear different things about, like, what percentage of your income that you look for to get people qualified at? What percentage of their payment of their total income? Is there like a number? It's like a magic number you guys like to stay under?
Absolutely. Obviously, there's ratios depending on the loan, whether you're in an FHA loan or you're in a conventional loan, or a VA loan is a lot more forgiving than most. I do a lot of VA loans, so typically they can push closer to 50%, a little bit higher.
Oh wow, 50%. Yeah.
Veterans they get extra benefits for sure.
Amazing.
You want to be below 42% ratios in most loans. And so you want to keep it under 42.
Okay, 42%.
Yeah,
That's good to know, because I've been hearing different things from obviously a lot of different people on social media. So 42% is a good benchmark, and I think that's realistic.
Yeah, between 42 and 50, depending on the loan.
Yeah.
In some cases, if you go non-QM, I mean, they're higher risk loans. They have a cost, and you can be a little more risky with that loan.
Okay, so speaking of risky loans,
Yeah.
Here's something that you guys should pay attention to if you guys are business owners and you don't have a W-2 to report.
Yep.
I find myself in this, so I run my flipping business. Obviously, we got the social media stuff going on, but I don't actually get a salary. I just collect my income, and I have to report it on my taxes. And it's been so hard to get a quality loan. Yeah. So even though I can make X amount of money, as I'm viewed by lenders, I'm basically trash. I'm like,
I wouldn't say that,
but you know what I'm saying.
Yeah.
It's been hard to. It's been really, really hard to get loans. I ended up getting them, but it's been through.
At what cost?
At what cost? I know the interest rates are a little higher. So why don't you talk about your best tips, and then what type of loans that people that own their own business usually get into, and how would you advise them to move forward?
So as you mentioned, most people are W-2'd, which makes tracking income and calculating income so seamless. But what happens when you're self-employed, like yourself and myself? Actually, everyone in our industry typically is considered self-employed. So even though this is our business and this is what we do, we typically have the hardest time capturing loans. But a lot of people are entrepreneurs in this world. And so how do they go about it? Well, the biggest thing is, as a business owner, we like to write off a lot. We like to offset costs, and that's fine and dandy. But if you are in the process or know you're going to be purchasing in the next 3 to 5 years, properly planning for that purchase is essential. What do you do when this is your business and you're constantly buying properties and flipping it? Well, you're a nightmare. I'm teasing. But you have to work with one particular person that understands your portfolio and understands that you have some intricacies that are not standard. But we look at cash flow. Yeah. There's different ways that we can assess it. We look at your cash flow. We can look at bank statements. We can look at your business and how sovereign it is, and just see the strength of where you're at. And so it takes a little more of what we call a forensic diagnostic, so to speak, but it can be done. And obviously it's not always pretty right out of the gate, but it doesn't mean that there's not ways that we can get it down to what a traditional mortgage would look like, or a traditional interest rate. 100%. Because out of the park, you're looking at, typically a little bit higher rate, because you have some risk. Yeah. Because business can have its ups and downs. Yeah, 100%. So I've had a little tricky time navigating that, and even for my rental loans, and just having the high interest rates right now, it's been hard to cash flow investment properties, particularly rentals. So as I'm refinancing, I like some properties I flip and then I keep. So I have a couple Big Bears rentals that I'm now doing Airbnb for. Fun. And I had a construction loan, 1-year loan on those, and then I moved out into a DSCR loan, but nothing cash flows. So I've had to put so much money down on those properties to make it fit into that loan that it's like, man, that took all my cash flow away. And I'm not getting a big monthly check from that. So, and what is a DCSR? It's a debt servicing conversion ratio loan. Yep. And so basically you use what's coming in terms of the cash flow and the rental income to offset the debt of the rent.
Correct.
And so in certain markets with elevated pricing, it's not going to cash out.
Yeah.
So that loan isn't going to be for everybody in every market. And in order to get the ratios to make sense, sometimes you have to come in with more down.
Yeah.
You're almost sometimes putting 25 to 50% down, and you're like, hey, I might as well just pay cash for this property.
Might as well just buy it outright. Jesus.
So the numbers have to work out. And I guess that's my question to you as an investor and flipper. Like, how difficult is it? Has it been for you in this market? Mm-hmm. And are you finding it challenging in certain areas over others?
Yeah. Well, it's been nearly impossible.
Okay.
Nearly impossible. I'm making it work just out of sheer will to make these rentals work on paper, but it's been a nightmare. But I know when I have a good property, and I know when to bite the bullet and hold on.
Yes.
And wait for a rate change to refinance out of that. So I'll give you an example. I have 2 Big Bear cabins, which I'm doing Airbnb. The properties are amazing, right by the slopes. They do well. They're rented all the time. Yeah. My monthly payment is out of control, and I still put a lot of money down just to make it fit that ratio.
Sure.
So I got into this knowing that I'm going to basically eat dirt for the next few years, maybe hopefully sooner.
Sure.
And then my whole goal is, look, these are rehabbed A+ position properties. Eat it now. Put the money down and patiently wait for the interest rates to get to a point where they're low. I would love to get it back in the 5s.
Sure.
If I get this property, which is at like high 7s, if I get that down to 5.5, that thing is going to cash flow so amazing. And I already put so much money down that I don't have to put any more down later.
Absolutely.
I'll just, refinance, get the better rate, and then hopefully in a couple years, it's a cash cow and making a lot of money monthly instead of just a little bit.
So you follow the theme of marry the house, date the rate type deal, right? We've talked about that.
Yeah, so I definitely do. I thought it was kind of a gimmick, honestly.
Yeah.
So
I mean, it sounds it, right?
It sounds a gimmick just to move and sell houses so realtors can push houses. But I think it really works out, man. And with the examples of Big Bear there, and then I'm buying this property came up in my hometown here that I wanted to keep for myself and my family. Great property, great lot, and
great history.
So it is the Alka-Seltzer Here's house. So it was built in the 1920s. I found all this old cool Alka-Seltzer like memorabilia checks, general ledgers.
Do you get a lifetime supply?
Yeah, I might need to after I find out the payment. So I might need to settle my stomach after I see the first monthly mortgage payment come through. But
I'll bring you some.
but that's an example of like, I wanted this unique property, and those just don't come on the market. Yeah. So what do? Well, if you put yourself in good cash positions frequently, you're able to do things like that and just eat it for a while until you the rates come down and refinance. So I've been hearing it, and then I didn't believe it. I thought it was a gimmick, and now I'm implementing it on both my investments and my principal residence.
I love that because, we keep hearing that rates are up and we know that they're higher than they've been, right, in the last 20 years. And that can be devastating to people who haven't seen them any higher than where they're currently at.
Right.
I'm not trying to date myself, but I will tell you that my very first house, my mortgage note was 9%, and I had great credit. It's just that's what it was at that time, and it was early 2000s. So price point was different naturally, but here we go. And, the marry the house, date the rate, that makes sense because guess what? You're not competing as much. I mean, you're still competing because there's a shortage of homes, but you're able to capture more that way, and you're in it for the short-term inconvenience, long-term benefit.
Yes.
And I think it's the same notion on that, and it's not a gimmick because supply and demand issues are very real right now with us. And so we do know that the feds are going to lower rates. They've made that very clear. Last Wednesday, we were all disappointed that they didn't lower rates. Jerome
100%.
Powell
I was watching that intensely.
Yeah, Jerome Powell did not deliver good news. And I watched on Sunday when everyone was watching the Grammys, I was watching 60 Minutes News. And that's when they interviewed Jerome Powell again on 60 Minutes. And they were talking about, where we stand in terms of unemployment and inflation and how inflation's, coming down from 9% down to 3%, but they really want it to get to 2%. And maybe in May we're going to see a decrease. I don't know that I believe that's going to be the case, but I think third and fourth quarters when we're going to see lots of action.
Yeah.
And that's when you're going to be able to make some moves.
Yeah.
And so how uncomfortable have you been and how long is it? But the long-term benefit is going to far exceed anything.
Yeah, 100%. So, I've been reading, and I read about this all the time. So every time I follow a news article or anything, I've just been getting updates about the Federal Reserve, what they're going to do with rates. And I'm seeing, everyone holds on to that. And I think it's important to know, what does the Federal Reserve do? And why does it affect mortgages? What is the federal funds rate? Why do mortgages follow it? Can you give a little insight about why people are so obsessed with the Federal Reserve and they probably don't even know what they do?
Right.
Why don't you give a little insight on that?
I mean, to the best of my knowledge, they absolutely stabilize and keep the economy afloat. And we make sure that we don't go into full-blown recession, and they try to control interest rates so we can keep everything balanced and our fiscal policy as streamlined as possible.
100.
So in 2021, for things going out of control, the inflation going out of control, and for them trying to figure out, how to get inflation regulated, and for us to come down essentially 6 points into the 3s has been tremendous, but there's a lot of question behind that. And the federal fund rate is actually the baseline that banks use, without getting too geeky with it.
Yes.
Yeah, the baseline that banks use to borrow money from each other overnight. So that's the base. So the base right now is 5.25, I would say. So based off of that is where they add where they add their interest rates, their money essentially, to give you your beautiful interest rate of 6.5% or 6.75%, or in your case with your big rare property, 7%.
Yeah.
So it's kind of like the baseline, and they help control it based off of a number of factors, the 10-year treasury bond, the employment rate, and inflation.
Yeah.
So all things considered. So right now, looking at the fact that credit card debt is up right now. I mean, it's the highest it's been in forever and ever and ever. And it's okay, we're waiting for some movement with these interest rates, but everything has a cyclical effect on everything else. Yep. So they're being very craftful, in my opinion, and mindful. I don't know that I necessarily agree, but there is going to be some movement with this market. But what happens if we drop rates and then we still don't have the inventory? What's going to happen? It's just going to drive pricing up.
That's where I've tried to position myself to be as a flipper, putting homes on the market. So we probably look at it from different angles. Yeah. But I've been buying up during the winter.
Sure.
And then getting things ready for spring in anticipation for a rate drop with no inventory. So smart. I'm trying to control the market a little bit in the areas that I work with.
It's absolutely smart. So again, that's where your strategy about entering the market as soon and as quickly as you can, because there's going to be opportunities, and we know there's a shortage. There's a supply and demand issue.
Yeah, everyone got scared away in 2022 and 2023 when we went into such a high interest rate hike.
Yes.
Do you think they should have increased the rates that quickly? And do you think they achieved their soft landing that they've been talking about?
I don't.
Yeah, right.
I don't.
Yeah. I got burned on those, by the way. I lost a lot of money in that Q4 of 2022. It's been my only losses in flipping.
Yes.
Has been when I bought in the middle of 2022 and sold in the winter.
Yes.
When the rates went to 7 and 8%.
Yeah.
There was just, everyone
no
was
margins.
spooked.
Yeah.
I mean, there was negative margins.
Yeah.
Let's be clear.
And I think that's really, really wise of you to share that, because it's the other side of this. It's fun. Has high profits and high returns and long-term benefits, but sharing that there's some pitfalls sometimes.
Yeah.
And you have to take a loss sometimes just to free up cash flow.
Yeah, and I definitely did that, and I tried to just move as much as I could to get my cash back because on the other side of that disaster was one of my best years ever. So
yeah, I mean, 2023 was one of my best years ever. Actually, the last 3 years have been fabulous. People are like, well, why? Why was 23 so good for you when rates were up?
Yeah.
People are still moving.
Yeah.
People aren't afraid of the market because they understand the dynamics and the economics behind supply and demand, and rates coming eventually down and being able to sit back while they're in a strong, equitable position. And their neighbors are all driving pricing up, and they're just refinancing.
Yes.
Yeah. So I think that's what we're anticipating from a lot of people. The other thing that's really kept business afloat is the fact that, there's something called like a blended exact rate, and it's more of an industry term, and it's like if you take all the different interest rate that you utilize, whether it's credit card debt, student loan debt, what have you, and your current mortgage, because I get phone calls all the time, like, I'll never sell, I've got a 3%, but you're paying $40,000 in credit card debt at 20%. So how much are you really paying? And what if we blended all that together and was able to still save you $1,200 a month? Like that's
100%.
Right. That's, it's just a no-brainer. It's just cash flow. So people are eventually going to move their way out of some of these lower rates, out of forced demand, actually.
Yeah, that's a good point. And then, this is the last point I had, is that on my principal residence that I'm living in now, and I'm going to be moving, is that my rate was 2.25%, which is just like the lowest rate ever. So kudos to me. I'm the man. No, I'm just kidding. No. But
and you're leaving it.
Yeah, I'm leaving it, and I'm not going to sell it. I'm just not. Because I'm going to rent it, and that one's going to cash flow the best out of anything, and it wasn't even meant to be an investment property. So always keep in mind, if you do have a rate, try to hold on and try to rent it, because that's going to be probably the best cash flowing property you have. So
for sure.
We are running out of time. But
we didn't even get to talk Super Bowl.
No, we are talking Super Bowl. I wanted to get to that because I know you're a 49ers fan.
Big time, and this is super exciting because I think we're gonna do it this Sunday finally.
You think you guys are gonna win?
Heck yeah. Oh,
I don't know. I think the script is out for the Taylor Swift and Travis Kelce. Taylor and Travis. I think Kelce gets a ring, and so does Tay-Tay. So we got 2 rings going on. I think he's going to propose after he wins the ring, but that's just my speculation.
I hope not. I hope all that does not happen. I think she deserves a better proposal, and I don't think neither one of them are ready for a ring.
Oh, dang. So 49ers gang, bang, bang. It's happening.
Yes.
49ers
We're
win.
Doing this.
You heard it first from her. I'm taking the Chiefs. So let us know what you guys think down in the comments of who's going to win the Super Bowl. And we're going to wrap up this 3rd episode. And thank you so much, Monica, for coming out.
Thank you. It was fun.
Yeah. All right. Bye, guys.
Bye-bye.